In this video, I'm going to discuss one indicator that you can tell if we are going into a bear market. This is a major indicator, and that is something that you can go back in history and see for yourself. Okay, first off, we have 1 year ago, we had $25,800 Bitcoin. We went a long way since then. Now, this is one of the reasons why Heidi and I got really bullish, especially when the FTX collapsed. We were saying, okay, I think we're near the bottom. We were seeing shorts really having a hard time pushing the price of Bitcoin down with FTX collapse. And so that was a really bullish indicator, thinking that made us think that this is definitely the bottom of the bear market. Okay, moving on, we have transactions. So people say, okay, well, what's the use case for Bitcoin? Well, here's a really interesting use case. MasterCard has had $9 trillion worth of transactions in 2023. Visa had $14.8 trillion of transactions in 2023. And Bitcoin had $36.6 trillion in transaction value in 2023. So what is this year going to be like? I think you can just guess that it's going to be more than Visa and MasterCard put together, especially what is happening around the world with ETFs, all these giant institutions jumping on the bandwagon. I think you're going to see more and more of this. Okay, also, we have now Wall Street Silver. He has a really good tweet. The White House says, we are unable to track $6.2 billion sent to Ukraine. This is real news that has happened. Okay, so as I've said before, American foreign policy, or whatever foreign policy, is just another name for money laundering. That's it. That's all it is. Also, we had California said, we are unable to track $24 billion spent to combat homelessness. The Pentagon, I remember this one. This is actually September 10th, 2001. They said the day before 9/11, actually, we are unable to track $2.3 trillion of military spending. Now, what's interesting about this is that the very place where that plane hit, that was the place where the accounting error was. Okay, so coincidence? I don't know. You guess. And also, the U.S. Treasury said we are unable to track $5 trillion of pandemic spending. And you know what? It's all a joke at this point. They can print so much currency. There's no accountability because there's no blockchain. Good thing with crypto, there's blockchain, and that's why they hate crypto. And we have a publicly verifiable blockchain, unlike anything government has. And they will never, ever go on a publicly verifiable blockchain because government is there just to lie, steal, and destroy. That's all they're there. That's all they're good for, pretty much. Moving on, let's talk about this bull market that we are in currently right now. A lot of people are very bearish right now, but I'm here to tell you this isn't the case, okay? This is from CJ. It's a very good tweet that he's done. He says, 2013, we briefly lost 70, and marginally at that, 70 is RSI, which is the relative strength index. It pretty much says if something is overbought or oversold. So the higher that number is, it's usually overbought, and the lower that number is, it's usually oversold. So oversold would be like 40 and 30, and overbought would definitely be 70, which, okay, so I'm going into this now, so listen up. Briefly lost 70, this is back in 2013, and marginally at that. Would class that as a near instant recovery and resumption of overbought conditions. If I'm not exactly endorsing a 68 RSI, read and calling it a bear market. Okay, so now 2017, 2018, it lost 70, and that was the end of the bull market. 2021, remember when we hit, I think it was $64,000. Okay, so 2021, we lost 70, then formed a bearish divergence. upon price making a higher high. So it went to $69,000 and then went into a bear market. So to recap this, he also says losing the monthly 70 RSI after remaining overbought for the entirety of a bull market. So that's kind of what happens. It stays at 70 or above during a bull market. Typically indicative of ending of a bull market, and we usually tag around 40 during a bear market cycle. So we can move into another bull market again. So that's really good point here. If you do look at the RSI, that's just one indicator. You can also look at fear and greed index. You can also look at moving averages. There's so many different things that you can be looking at, but here's just one tool in your box that you can have to give you kind of an awareness of what is happening during this bull market. So say for instance, we do go to $100,000 or $120,000 this bull market, and we do lose 70 and it starts going down from there. Then maybe that's a really good indicator that you can use to go ahead and say, hey, you know what? I want to have a little bit risk off. So I'm going to take a little bit of profits. I think that's a really smart idea. There's so many people saying, okay, we're going to go to, trust me on this, when we go to $100,000, people are going to say $250,000, $500,000. You got to drown that noise out and think about yourself and your risk management here. And you know what? It's never bad to take profit when you are in major profit, especially during a bull market. But there is a time and place for taking profits. I think right now, if you're taking profits, it's kind of crazy because we are definitely in a bull market. We haven't lost a bull market structure at all. And I think, by the time most people realize we are going to be over $100,000. And, once we're at $100,000 and more, that's just going to fuel so much FOMO. And you kind of want to take a step back from that. And we will be there. We are posting on learningcrypto.com. We are sharing with people what we expect to happen, and especially when we are going to be taking profits. We're probably going to be dollar cost averaging out. Actually, not probably. We are going to be dollar cost averaging out. I think that's a very smart play. Anyways, that's all I have. Like and subscribe. Talk to you soon.